Independent. That's Kelly Clarkson. What is it now, Miss? What's the e-commerce site she's pushing? Can't remember. But she's shopping online, along with the rest of us. 8:41 here. Time to check in on money and see what Wall Street's doing to your money this morning. It's another strange day up in New York going on. Let's go downtown to see what's going on. Statler Financial Services. Phillip Statler on the line with us. I keep wanting to say downtown. You're operating from an undisclosed location in your home, right, Phillip?
Yep. We're at home, though. I am going into the office this morning. Have to sign some checks, which is an important thing for a lot of folks.
Yeah, I agree. Especially if one of them is for me. I like that. Start out setting the table today. Yesterday, when the close came finally, looked like a pretty routine day on Wall Street. Dow up 39, NASDAQ off by 0.6, Standard & Poor's down by 1.5. Pretty much everything back to normal if you look at it as a snapshot. But then we get up to this morning and the government dumps the durable goods figures on us, how much people ordered things that last, and we just absolutely tanked during the month of March, didn't we?
Yeah, we did. It was not a pretty sight. Durable goods orders plunged almost 14.5%. It was expected to be somewhere between 11.5 and 11 and 12%, basically. So a little bit worse than expected on durable goods. And that's, for people that don't realize what that is, that's hard goods like your dishwashers, your washing machines, your refrigerator, that type of thing, stuff that's going to last more than just a year or two.
Absolutely. The thing that really hit me between the eyes when I looked at the number is, we expected bad. We got atrocious. Once you pulled transportation out, it was only down 0.2%, which means, oh my God, boy, did the automotive industry tank during the month of March. We kind of got scared and we just stopped buying stuff like that, evidently.
Well, I think so. And I mean, it does make sense, Dave. I mean, if you think about the end of February and going into March, people started getting a little bit afraid of what could happen. And smartly so, because a lot of them lost their jobs, and to think, had they just bought a car and then lost their jobs, that would have been disastrous for them. So I think people realized what was happening and backed off of those large purchases.
Now, you and I kind of saw that coming. We commented in the middle of March about how all the automotive manufacturers on their credit offers were offering coronavirus insurance. Basically, if you lost your job, they'd take care of your payments and whatnot. They saw it coming, and they obviously were feeling it one-on-one, and it really showed when you start getting the national report out of March. We're in the middle of earnings season now, and we got a couple of big ones making news, some of them not on earnings, some of them on the court front, like the folks at Victoria's Secret, I gather.
Yeah, here's the secret at Victoria's Secret. They have filed a complaint with the SEC against the private equity firm of Sycamore Partners. That's who was going to buy them. Or not buy the company, but they were going to buy a Victoria's Secret unit from them. And Sycamore Partners, because of the impact of COVID-19, they want to renegotiate the price because of what they're getting and the circumstances that are there. So they filed a lawsuit. So I'm not sure how this is all going to pan out. It's not really hurting the stock this morning. I guess stockholders or traders feel like they're going to come out okay either way, that somebody's going to end up taking that. But yeah, so it's going to be interesting to see how that kind of plays out.
Understood. I'm seeing little sidebar stories about things like that from companies without the profile of Victoria's Secret. A bunch of merger and acquisition activity now suddenly getting renegotiated because the target company is nowhere near as valuable as it was 2 months ago before we got into this mess. That might very well be an ongoing story for a lot of merger and acquisition activity, wouldn't you guess?
Yeah, and it's going to be like you're going to hope the attorneys wrote those agreements. If you're the buying company, you're going to want to make sure that those agreements were written in your favor and that you can renegotiate the price if things go south.
Oh, yeah, you lock something in and you buy a company that's worth half as much as it was. It's not pretty. Speaking of companies that are projecting sales decreases and are having it, one of the companies that reported was Verizon. They're responding to the coronavirus thing. I got a note from them saying they were giving me 5 free gigabytes of data on my cell phone for May, and they'd boosted my allowance during April. That's really nice of them. I appreciated that, but they're just working their buns off to hang on to customers, aren't they?
Yeah, they do seem to be. I mean, they did come out ahead of expectations by about 3 cents a share. Revenue, though, was below what was forecasted. They did cut their full year outlook, just like a lot of companies are doing right now. And
I was surprised they had an outlook at all. They're one of the rare ones that even put an outlook out.
yeah, but they did say this, Dave, that they had a strong start to 2020 prior to the pandemic really hitting, and they expect to emerge from this this crisis actually stronger than when they went into it.
Ooh.
Not really helping their stock price this morning, but they're up relatively close. They're within probably 10% of their 52-week high right now. And so they're trading down about 1/3%.
Understood. I know their guidance was saying they expected sales of cell phones and upgrade products like going out and buying that new Galaxy or iPhone to be a little on the soft side, and they had a big decrease in postpaid subscriptions. So that's why I suspect they're doing their best to hang on to customers, right?
Yeah, I think so. You know, the unemployment will affect them, and furloughs are going to affect them from the prepaid standpoint. But I think that they at least, like most utilities, they have a baseline of customers that are going to pay that bill every month, no matter what, because they need that connection.
Understood. Got some other companies that we've all heard of that are reporting as well. We're kind of into the meat of the season right now, aren't we?
Yeah, we are. We've got American Express. They beat by about 29 cents a share. They did make after the quarter ended, I believe it said in the report I was looking at, they made a huge increase in their loss reserves. They went from 809 million they had the first quarter of last year up to 2.6 billion this year. Yeah. The other thing they've seen now, which you and I would expect this, right? They've seen a big decline that started in February, late February, in people spending money. People have been cutting back on their expenditures. They're not getting hurt by much though. This morning they're up almost 2%.
Cool. They're getting a positive reaction for bad news.
Yeah, you know they're big enough; they'll weather that storm no matter what.
Yeah.
Intel in the computer world, they had a pretty good quarter, beat significantly. Revenue also beat the forecast. Now their current quarter forecast though was below the estimates that everybody was expecting, and they're not updating their full year outlook. They're not changing it right now. They're kind of leaving it the same. They'll do that later. They're trading down today, 4.75%. Hey, another one that's been, you and I talked about this one, probably fourth quarter last year, E-Trade. You know, yeah. E-Trade's in the process of getting bought by Morgan Stanley. They didn't have a good quarter day. They missed estimates by about 19 cents a share on earnings. Revenue missed. They've had some issues in terms of just increased costs as far as getting ready for this merger. And they've had to make some provisions for some credit losses on their margin accounts. So they're trading down today. No, I'm sorry. They've come back. They're flat, actually. They're not trading either way right now.
Why would I be surprised that E-Trade would be having difficulties the way the market's been going lately, right?
Yeah, and you think if people are in trouble, trying to cover their margins could be difficult.
Yeah, I hear you. Got time for one or two more?
So let's talk about two things we've got going on right now, not earnings related, but company related. So we've got two companies right now in the news that are struggling significantly. We've got Hertz, who is meeting with advisors trying to figure out how to restructure their debt to keep them out of bankruptcy. And then we've got JCPenney's actually in the advanced stages of talking about bankruptcy and getting closer to actually filing that situation. So That seems to be the other thing that we're seeing right now.
One of the things we were most afraid of with the big shutdown was the future of J.C. Penney's, just on the grounds that they were having some difficulties after a bad fourth quarter last year anyway. Kind of wondering whether or not they were going to make it through this mess. It looks like it might not be a positive outcome for them.
Yeah, I'm thinking, given what I'm seeing, the stock price at 23 cents, down 4 cents from yesterday's close, which is down 16%. So, yeah, this not a good sign.
Not a good sign. Kind of up yesterday to start the day, starting it out this morning 45 minutes early. Which way are we heading so far, Phillip?
Well, I'll tell you, Dave, we are seeing an increasing green checkerboard here. So at this point, we've got the Dow up almost 0.9%, $206. S&P 500 is up almost 1%, $27. And the NASDAQ's up about 0.8%, $67. So everything on the stock front, equities front, seems to be moving upwards today. And the same thing on the commodities side today, Dave. We got the silver up 1.1%, gold up 0.5%, and crude oil is up 4.25% this morning, $17.21 a barrel.
Hey, my gosh, we're up to about 40% of where we need to be to start pumping oil again.
Yeah, not a good sign.
Not good, not going up fast enough, and I never thought I'd be saying that. Overseas markets, they aren't following our lead. Asia was off by a little, but off at the close this morning. Europe is continuing about 0.5% slide on most of their major indexes, too, as they get through their day. Phillip, it's weird out there. Like I said, the international markets aren't following us. Commodities are running on the cheap side, and the market's going the opposite direction of the economic reports. That's got to take some advice from a pro. How do I find you to get that advice?
Yeah, they can give us a call at 863-382-0037. Hey, give us a call. Let's schedule a 10, 15-minute phone consultation to see kind of where you are and see where we may be able to help you if you need help at all. Maybe you're good, but just a sounding board for you. And then follow us on Facebook where we repost Dave and I's conversation of the morning, Statler Financial Services. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty. I do appreciate you, and thank you so much. Have a great weekend, Phillip. We'll catch you on Monday, all right?
All right, man. You too.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. I want to thank you again for joining us today. I hope that your week has been a good one. I hope you have a great weekend. Please remember to be safe, continue to social distancing, and we'll weather this storm and get through it together. I look forward to seeing you again on Monday.